This one simple trading strategy made me $8,000 in 3 hours, and in today's video, I'm going to be breaking everything down step by step. But first, let me share the proof.
Today's Wednesday, 22nd of Jan. The high probability setup of the day for me is going to be waiting for a run of this external range liquidity that we see in here. Obviously we have a bunch of highs with no real conviction going ahead of them. Once I get the run like this in London session or in New York session, I'll wait for my confirmation, which will be lower time frame confirmation of market structure. And then if we get that shift in there, that's essentially when I'll be looking to go short. Tuning in next day, we had all of this buy side liquidity that was sitting in this region in here. I wanted to see a run of that liquidity, a lower time frame reversal, and then trade back down to the sell side. When New York session came, I actually had a live session with the members. Just waiting for a manipulation of this buy side. If I get manipulation of buy side, I'll execute. So that's how the actual trade played out, 1 to 3. And then if we just head over into TradeZella, this is the execution of it. So it was Thursday, 23rd of Jan, we made just under $8,000, $7,900.
So this video is broken into 2 parts. First, I need to share with you the idea behind this strategy. You need to understand why this strategy works, why it's so powerful, and what it's playing off of. In the second part, I'll break down the trade that I took, showing you step by step the trading strategy and the trade breakdown. The idea behind this system is the foundation that the markets are manipulated. This is something you have to understand and you have to accept. The fact is, 95% of traders fail, and 95% of what gurus tell you will not work. In fact, the systems that I trade are primarily focused on understanding what they do and then doing the complete opposite. Because trading is a zero-sum game. You see, for every buyer, there must be a seller, which means every winner, there must be a loser. And if 95% of retail traders are failing, then I need to understand what they're doing so that I can do the opposite, because in doing so, I will automatically win. So let me share with you now the step-by-step process. In essence, this is what the model looks like. There are 4 main steps here, and we're gonna look at each step individually. But very simply put, the overarching idea here is to wait for a retail trap. This retail trap can be seen as support, resistance, equal highs, trend lines, lagging indicators, everything that everybody else in the market uses. When you see an obvious chart pattern, that is where you understand that many retail traders are sitting at that level. Then what we do is we wait for that level to be purposefully manipulated. Once that level has been purposefully manipulated, then we're gonna wait for the lower time frame to shift its order flow. So from going to putting in highs, higher lows, higher highs, to lower lows. Once we get this confirmation right here, that is our time to play the pullback. Because once the liquidity has been taken, the market needs to go to the next available liquidity. Think of the market like a magnet. The same way that a magnet is attracted to metal, the market is attracted to liquidity, which simply means where is everybody's orders and where is everybody's stop losses? Because that's what puts money into the market. We understand that the market is always going from one pocket to the next pocket. Step 1 is identifying that first pocket. Let's go a little bit deeper here. So I want you to imagine for a second this formation that we have in the chart. Now, what 95% of people here see is an area of resistance. People are taught that this area right here should be respected and is tradable, because what do they see? They see that price comes into this level and then we have a rejection. We come into the same level and then we get another rejection. Now, what this tells most people is that they have an opportunity to sell here, because this level in here is being respected, or so they think. So then what happens is we've created it 2 times. On the 3rd time, that is where people start to sell from this level. They sell here and they put their stop losses above this high. That is how you identify the liquidity trap. It's areas where people are looking to get involved. And then you have to look on the other side of the market. What else do we have here? There's a different type of trader who's sitting here and waiting for this level of resistance to be broken. And when this level of resistance gets broken, what they want to do is they want to buy. So you have people who are selling from here, And then you have people who are buying when it breaks. Well, by doing that, we've been able to identify in this specific scenario that most of the market are looking to sell this area and some of the market are looking to buy after we break that area. So we've identified the retail traders. Now, what we want to do is wait for both of those people to get induced into their positions. So for example, when price starts to come and react from here, there are many traders that are flooding into the market to try to sell price as it has these rejections. These rejections invite sellers. It's like an inducement, it's a temptation, and people just can't resist the urge. They think that they see that price is going to go lower, and so they jump into the market. Then you have the other reaction that happens. Eventually price goes into this area, and everyone who was selling in this area gets taken out of their trade. But all of these sellers have stop losses. And what happens when their stop losses get hit, it acts as buying liquidity. For example, when you have a position like this, if you're a seller, when you sell, you put liquidity in, right? You bet money that market's going down. You've put money into the market. Now, if price takes you out of your position, you have to buy back out of that position. That's how the mechanics of the liquidity work. You sell and then you buy back your position later, either at a profit or a loss. So when that happens, you send buy orders into the market, which takes price higher. So if there's all of these stop losses that are sitting in this area, for example, when price goes into this level, we immediately have an automatic expansion higher because all of the liquidity from these traders makes price go higher. That is literally how the market mechanics work. And so then you have the other side of the traders that are looking for the breakout, and they also buy from this level. So what's happened here is we have this automatic level in where buy orders are coming into the market. So buy liquidity is coming in. Now here's what happens. This is how smart money operate. And if you want more information on exactly how smart money operate, I'll link a video to watch after this one in the description. It'll give you a more in-depth understanding of the phases of smart money. But for the purpose of this video, it's important to understand that smart money, these large institutions, they have so much money that for them to get filled at their desired price, they have to have other people at that level ready to take their orders. So what do? They create scenarios like these to induce money into the market so that they can use that money to put their positions into the market. That is exactly how market manipulation works. So what happens? Smart money can use some of their money to push price into this area and then leave it because they understand that the rest of the market will take price higher. And guess what? All of these buyers in here, everyone who is looking to buy in this level, well, smart money is able to get their sell orders in there. Let's say, for example, there was, $100 million worth of sell orders that smart money wanted to get into the market at this price right here. Or they would need $100 million worth of buy orders from the other side of the market to fill that transaction at that price point. So this is why they create these traps, so that they can fill their orders. This is how market making works. So then what happens? Well, if they are overall manipulating the market to go higher so that they can put in their sell orders, then you've already guessed it. They think that price is going to go lower. This is why 90% of the time when you think it's going to go higher, they're actually just manipulating that to then go lower. And that is what we play on. When you see the trade breakdown, you'll understand this in detail. So what do? We wait for all of this manipulation to occur, and then we get involved when the real move starts to happen. That is when these guys have already been taken out, these guys have already been tagged in, and now they are trying to ride their position, right? So these buyers that have got into the market on this break, they put their stop losses in places like this. And then what happens is we just simply wait for a reversal. That reversal looks like this, right? When price is coming above these highs, when price is coming up like this, there's a lot of bullish structure. The only way to understand and confirm that the bullish move is over is to wait for this right here. This is where you have price moving high, low, higher high, higher low, higher high, lower low. A market structure shift where we go higher high to lower low. This right here is our confirmation. This is when we are ready to go short. Off the back of that, we'll just wait for some kind of area of fair value gap or some kind of area of supply zone, and we'll trade off the back of this. We don't have to target the swing lows. We just simply need to trade some level of pullback. like this. And that is literally what this model is designed on. So now let's walk through step by step and show you what it looks like in real time. If you watched the beginning of this video, you would have seen me break this trade down before it happened to my members. So let's take a little bit of a look at what exactly it was that I was looking at for that day. So when I came into London session on the 22nd of January, the London session here is this green box. What I said was that there is a lot of liquidity above these highs. Right? There is an obvious area of resistance here. You have, 1 high, 2 high, 3 highs, 4 highs, 5 highs, and each high is creating a aggressive move to the downside. We put in a high, we sell off. 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 So it's just the nature of the retail market. They trade based off of not logic or understanding real mechanics. They try to trade off pattern recognition. If it happened before, it might happen again. Instead of understanding what's really going on in the market, in the order book, what's actually happening with the footprint. So they trade patterns. Now, that's fine, but just because something happened before doesn't mean it's going to happen again in regards to patterns. So what they do is they see that price reacted, and then they get ready to sell because they think, well, it happened before, and so if we get in here again, it's going to happen again. And so when it starts giving you the reaction, that is exactly when they think it's going to work. So they sell from this level, they put their stop losses up here, and then you have the other side of the market who are waiting for this area to break so that they can buy. So we've identified the manipulation, we've identified the trap. Now what we wait for is we wait for a break of that trap up in here, wait for them to be taken out, and then we wait for the lower time frame shift. So in London session, when we got the break of the trap, there was no confirmation for me to go short, so I had to come back in New York session. Now, when New York session opened, if we go to the 5-minute time frame, this is what price looked like, right? Price was like this. Now, for me, what I needed to see was some kind of pullback and shift of an old high, so another liquidation of price, right? A liquidation of one of these highs. And then once we got that, I could look for a lower time frame shift. So once we get this manipulation of this high, as you see in the beginning of the video, that was my trigger to get ready to go down to a lower time frame, wait for the shift on the lower time frame, and then look at executing. So this is pretty much what the market looked like at that moment in time. And I was waiting for this low right here to be taken out. Why? Because you have these structural levels. You have price pushes up, pulls back, pushes up, pulls back, pushes up, pulls back, pushes up. So you can see that this swing right here, right? This swing level and this swing level is where we're currently sitting at. And so if that low gets breached, that is my entry. Now, if it wicks like this, it doesn't count. I need to see it properly break. When price breaks, right, like this in here, I just need to find the order block. So for me, it's literally just this level. There's no fair value gaps in this price range. Everything is balanced price range. So my entry comes pretty much instantaneous. It goes from this order block in here, and my stop loss goes above the highs up in here. And if we go to a higher time frame again, I was just simply looking for a 1 to 3 risk to reward, right? Very, very simple. Nothing over expansive. I don't need to take the swing lows or something. I just understand that when the market has overextended in this direction, past this liquidity, the market will come back. That is the principle that this system is based off of. So when that happens and we get kind of our entry confirmation, then I execute. And then it's just a case of waiting for price to play out. As you can see, we had a really nice reaction from our level. Stops covered. And then eventually price smashed through the take profit, giving me a 1 to 3 risk reward and making me $8,000 in the 3 hours that it took to go from here to here. Now, the key here is that's 3 hours of the price playing out, but so much time and detail and thought goes into building a high probability trade setup.